topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good morning. Cold Florida. We don't get to say that very much here in Florida. I'm in South Florida, Southeast Florida, and we're at 36 degrees. It got down to about 36 here, and actually the wind chill was about 20. Our first guest this morning, our expert, longtime expert, I even heard they might have even gotten some snow. But I got to get to the show right away because we were inundated this weekend with emails for this show. Let me introduce you to our expert, longtime expert, Ray Ferraro with Provise Management Group. Hi, Ray.
Steve, good morning. It is chilly, but before we get to all of that, it's very difficult to see you because I'm not sure your camera's on.
Oh,
so you might want to double check that and see how that's working, because right now it's just a blank screen.
That's surprising.
Anyhow, to answer your question, yes, we did get some snow flurries here in the Tampa Bay area this weekend. There you are. And the fact of the matter is first time we've gotten flurries since 2010. But the last time we had any accumulation at all was way back in 1977. So just enough to get people excited, but not enough to even think about making a snowball out of all of the what we had. But it is chilly, and we just have to be very fortunate that we're not up north where it's a lot less warm than where we are, in spite of fact how cold it is here.
Ray, I know this is going to be the easiest question for you to answer as to what everybody wants to know. But first of all, tell us about Provise Management Group.
Well, Steve, Provise is a financial planning and investment management firm. And I always put financial planning first because that's really what we are. We believe in financial planning, and we see investment management as a subset of the plan. If we know the goals, we know the objectives, we know the risk tolerance, then investment planning, investment management is just a subset of the financial plan. We have offices in 2 locations. Clearwater is our main office, and we also have one in the West Shore area of Tampa. We do an awful lot on Zoom for those that are outside of the Tampa Bay area or prefer Zoom itself. We always offer a 1-hour complimentary consultation with one of our professionals, and happy to visit with any of our listeners personally myself. And if they want to take advantage of that 1-hour consultation, all they have to do is give us a call at 727-441-9022. That's 727-441-9022. And just say, I want to have that complimentary 1-hour consultation with Ray.
And Ray, you have definitely the best newsletter that goes out.
Well, thank you. We do send that to our friends and our clients twice monthly. We call it the Provise Perspectives. And we have about 4,500 people by last count on our mailing list, and always willing and able to add another person or two along the way. So another thing for you to do, if you don't want to take advantage of the consultation, give us a call and just say, I'd like to get that newsletter Ray talked about at 727-441-9022.
Okay, Ray. So here's your question of the day. What has been the main topic of emails that we received this weekend?
You see, if I'm going to guess, I'm going to say it probably has something to do with the Fed.
Yeah, absolutely. Someone by the name of Kevin Warsh.
Yeah. So Kevin Warsh is a former member of the Federal Reserve Board, and actually served on the open committee for a period of time. He has extremely good credentials, a very smart individual, and shouldn't be a controversial choice for either Republicans or Democrats. That said, given the partisanship that exists in Washington today, I fear that the Democrats will vote against him because they think that the president will weigh a heavy influence on him, and have him start lowering interest rates right away. I think that's very unfair to judge a person before they get into office like that. But I fear that that's going to be the case. I would hope it would be more bipartisan. However, that's not the only thing that's blocking his way to becoming confirmed as the next Fed chair. A senator has made it very clear that until the Justice Department probe into Chair Powell is either completed or abandoned altogether, that he intends to hold up not just the federal chair nominations, but all nominations, including those for judges and other appointments that are required. So we've got people on both sides of the aisle that are threatening to not support Kevin Warsh. But I have to say that based on the merits, not on the politics, but based on the merits, I think the president made a very good choice. We made a prediction at the beginning of the year that said that the new Fed chair would not raise rates at the June meeting, but because he wouldn't want to be seen as a lackey to the president.
Right.
I still think that that's the case. I think that he'll wait until the subsequent meeting in late July or early August. But I think that at that point he will convince the committee to lower interest rates by another quarter of a point. And speaking of interest rates, the Fed met this past week. That's the other news from the Fed.
Yes.
And they did not lower interest rates, not unexpected at all. And I would not expect them to raise the interest rates at the next meeting either. But I wouldn't be surprised if they don't do it at the meeting. Let's see, it would be the meeting in May, Powell's last meeting. It wouldn't surprise me if they actually lower the interest rate at that meeting. We'll have to see how it all pans out. But again, I think Kevin Warsh is a good choice. Feel very comfortable with him there. He went through the great crisis, the recession that we had in 2008, 2009. So he's got lots of experience behind him.
So what else do you see from an economic standpoint with Warsh?
So, from an economic standpoint, I think we have an economy that that is really doing quite well under the circumstances with all of the uncertainty that we enjoyed during 2025, and some even into 2026. Certainly one that has managed to overcome the tariffs that have been opposed or threatened to be imposed. The performance in the third quarter of 2025, we finally got some valuable numbers, was quite excellent. It looks like it spilled over into the fourth quarter to be positive as well. Maybe not as didn't do as well as it might have in the third quarter because of the government shutdown, but still posting positive numbers. Earnings from corporations are continuing to move in a positive direction with a lot of momentum, and their guidance, for the most part, seems to be high. We have an economy where people are not being fired en masse, but they're not being hired en masse either. So people are being cautious about hiring new people, but they're being equally cautious about laying off people otherwise. If you strip out the 277,000 people that either quit or were fired from the federal government, which represented a significant portion of the federal government's payroll, the last year wasn't nearly as bad as the numbers would indicate. So at the present time, we're still looking for the economy to do well this year. And as a result, we think the markets will do well, will do as well going forward. Not as nice as they did the last couple of years with those double-digit returns, but still producing a positive return for the year.
So the next question is that we got a lot of email on. People want to know why gold and silver they were going through the roof, but they've taken a huge plunge in the last 2 or 3 days.
So let's take a look at the technical side of all of that. Gold has traditionally been viewed as a hedge against inflation. And a lot up in gold over the past couple of years, and particularly the last 15 months, can be directly attributable to the inflation that we had back in 2022 and 23, and then still some into 24 as it was coming down. So that doesn't surprise anybody. To have done as well as it's done, however, makes one scratch the back of their head and say, what else is going on? Well, the dollar has weakened, and that has forced the price of gold up. But here's the dirty little secret that nobody's talking about. The dollar's value today is just about where it was pre-pandemic. So it's as bad as it's been. It's come down off of a high as a result of all of the money that was created, et cetera, during the pandemic and all the buying that has occurred. And now it's weakened, but it's only gone back to where it was 5 or 6 years ago. Now, when you look at silver, that's a whole different story, because silver, which often walks in lockstep with gold, didn't do that for the longest period of time. And then about 6 months ago, a call was made to say, buy silver, not gold. And silver, unlike gold, really has industrial use. And gold, outside of jewelry, really doesn't have much in industry behind it. And here's my take on it and why I think the crash occurred last week. And it wasn't just a crash. It was a full-blown people running for the fences to get out of town. Gold went from a high that approached about $130 an ounce last week down to $85 an ounce. and that was on silver. Gold, which got
Silver.
to, I'm sorry, for silver. Gold, which got to around 5,500, crashed down to 47, 48. Now, both are recovering a little bit this morning because that sell-off was probably overblown. But what caused the sell-off? What caused the sell-off, we suspect, is people who were leveraging their investments into silver and gold over the past 6 weeks or so. They weren't really buying it with cash. They were buying it by borrowing money. And then as soon as the price starts to drop a little bit, those loans start to get called, and then it cascades because more people have to sell, cover the next load of loans, carry that, and down and down and down it went. And hence, that just kind of cools off the speculation. Silver and gold are probably still a little overblown. And we may see a gradual increase over the rest of the year, but I wouldn't look for it to continue its rapid pace of the last 12 to 15 months.
Okay. So my next question is, you and I are on the sidelines on this one.
Okay.
We got the Super Bowl coming up next Sunday, and I don't even care which team wins. But there's a theory behind this, isn't there?
There is, Steve. And before I talk about the Super Bowl theory, let me talk about two other theories, which have already passed. The first one is what's called the 5-day rule. And it says the first 5 trading days of a new year, if they're positive, is a strong indication that the market's going to be positive for the year. And it was positive. There's also another rule, which is called the January effect. And that is if the month of January is positive, that it'll be a good year in the market. And January was a positive month. And so now for the trifecta, the Super Bowl theory. So here's the Super Bowl theory, developed a long time ago. And it basically says that if the winner of the Super Bowl is an NFC team or a former NFL team, and you can think of like the Pittsburgh Steelers, which are now in the American Conference. If any of the NFC teams or any of the 4 old NFL teams win the Super Bowl, then it's going to be an up year for the market. Conversely, if any of the existing American Football Conference teams win, then it'll be a down year for the market. And early on, the Super Bowl theory had a lot of credibility to it, somewhere in the 80%. Over the years, that's dissipated a little bit. Maybe you could, talk about it being a reversion to the mean, but still, it's a fun thing to think about. So if you want to believe in the Super Bowl theory and want it to pile on to the 5-year rule and the January effect circumstance, you have to root for Seattle, Steve. Seattle. You don't want to root for the Patriots. Now I know I just upset a lot of America, but I'm all about economics. I'm not about the politics of football. So I'll be rooting for the Seattle Seahawks, and then we'll have the perfect trifecta for the year.
Okay. Ray, I love doing this show with you, and it looks like by our YouTube numbers, a lot of people are tuning in. Tell people how they can reach you.
Now, the best way to reach us is to give us a call at 727-441-9022. And when you call, you can ask to get on our mailing list for the newsletter that we talked about a little earlier, or take advantage of our complimentary 1-hour consultation in either our Clearwater or Tampa office or by Zoom, your choice. And join perhaps if you decide to become a client, the over 1,200 families that we're already working with, scattered over 30 states, and managing about $2 billion on behalf of our clients. But I want to stress to everybody again, we are financial planners. We believe in having a plan, and that's the basis of all of the work that we do, And of course, all of it is done and has been done since the late 80s on a fiduciary standard of care where we must put our clients' interests ahead of our own.
Ray, you're the best. More good news. Ray's going to be back with us in 2 weeks. He does 2 shows a month with us, and we'll be back again. Ray, stay warm. Did you ever get any snow?
We got some flurries, but that was it. Ever so brief. I was not awake in the middle of the night to see the flurries. I just saw the videos that were on the news the next day.
Gotcha.
So
okay,
we'll
stay
have to wait
warm.
for another. Yeah. You as well, Stephen. I'll see you in 2 weeks.
For sure. Thanks, Ray.
Take care.
That's
Bye-bye.
Ray Ferrara with Provise. We're going to go to a quick break. We'll be right back.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.